Welcome, everyone, and thanks so much for joining us for today's webinar. My name is Marianne Hensley. I'm the Vice President of Media Operations here at FreightWaves, and we're happy to be here to present today's webinar in partnership with Uber Freight. Today, we're going to be exploring how real-time freight operations are transforming the logistics world. We'll be hearing insights from Bill Driegert, Head of Operations for Uber Freight, as well as Mike Place, Product Manager for Uber Freight. We'll also have a live Q&A with both speakers following the presentation. Before we get started, just a couple of quick housekeeping items. First, if you have any issues during the webinar, please feel free to reach out to our team via the chat function in your Zoom control panel. And second, I mentioned we'd be having that Q&A with our speakers after the presentation. You can enter any questions for them you have through the Q&A button in your control panel as well, and we'll answer as many of those as we have time for during the live Q&A at the end of the presentation. At this point, and without further ado, I will go ahead and turn it over to Bill.
Great, thank you. Hello, everybody. This is Bill Driegert. I'm the Head of Operations and one of the co-founders here at Uber Freight, and I'm joined today with Mike Place from our product team, who works on our marketplace team. So I'm going to give a quick overview of Uber Freight and how it fits within the Uber ecosystem and how we're bringing the Uber vision to freight, and then Mike is going to go into detail on some of the products that we are working on. So a quick summary on Uber. So if you're not familiar, Uber started in 2009, and over the last 10 years has transformed how we get around worldwide. We're now in over 63 countries. We've moved well over 10 billion. I think we're actually over 15 billion total trips across 700 cities worldwide. And that's 26 billion total miles that we've moved. And really, if you think about what Uber has done to personal transportation, it's changed how we experience just getting around cities. It's changed how we think about transportation, and it's in many cases changed how people think about car ownership. And now I can just pull out my phone, hit a button, and get anywhere I want to within minutes, which has been transformational to the transportation ecosystem. It's also brought the idea of Uber for this, Uber for that to the market. And so Uber for Freight is a concept which has actually been in the market for some time now, and the Uberization of logistics is something people have been talking about within logistics supply chain for I'd say over 8 years at this point. So Uber started in rides, and we've expanded into Eats. We now have jump bikes, we have Elevate, we have ATG. We really think about Uber as a platform for transportation. So Uber, behind the scenes, we are a marketplace that connects users on two sides of a transportation market. So on one side we have drivers, on the other side we have riders, or in Eats, on one side we have eaters, on the other side we have restaurants, and we also have drivers. And behind the scenes, we built out all these deep capabilities and infrastructure. So we have marketplace capabilities, we have maps and routing. So Uber has its own mapping capabilities. We have deep payment integrations and the ability to receive money at a massive scale from our riders and pay our drivers instantly. We built out a huge infrastructure in vetting our drivers and vetting our riders and driving trust through the marketplace. I think one thing that Uber has changed is that we instantly, the idea of getting into a car with a stranger, 10 years ago was unimaginable. But now we pull out our applications and we see that it's a 4.9 star driver. We see they're 5 minutes away. We know what kind of car they're driving, and that creates this instant trust. And we also have a massive amount of data. So Uber deals with geographic data, we deal with place data, we deal with location data. We built out a massive capability behind the scenes to be able to manage that data and make use of that data, which Mike will talk a little bit about how we're leveraging that within the freight space, but we're really building on the shoulders of giants, and that Uber has built all this infrastructure already and built this transportation platform. So the other thing that we have is we have a massive network, right? So Uber is very much a network effects driven business in the sense that we need density of riders, and we need density of drivers. And in building out that network on the ride side, we've learned a lot about the benefit of network effects and how that can drive momentum in our business. And building upon that, if you go to the next slide. Within rides, we're dealing with a network of drivers and riders. Within freight, we're dealing with a network of loads and truck drivers. And one key difference with freight versus rides is with rides, it's on a very local scale. So when we build density, we build it city by city. But when we came to the market for freight, it's very much a national or regional network, and that we have to build density across the entire U.S. To get the same sort of liquidity that we would get in a rides business in one city at a time. Ultimately, what we're trying to build in freight is we want to create an on-demand network for freight. So to us, what real-time means is that you can instantaneously get pricing, you can instantaneously get capacity. To be able to build that instant on-demand network, first we have to build the deepest network of digitally enabled carriers. And what I mean by that is carriers that can pull out their phone and book a load instantaneously at a fixed price. We currently have over 500,000 carriers on the platform that daily are checking our application for available loads. What that then creates is this instant real-time network where we are able to procure in seconds and access hundreds of thousands of drivers within seconds when a new load or new opportunity hits our marketplace. And then on the shipper side, that creates this instant access to capacity, instant visibility to pricing, and instant liquidity in the market. So as we came to market, the first thing that we focused on was the carrier side of the market and the challenges in the carrier side. So in 2019, we've seen this acutely. It's a soft market. There's been over 640 bankruptcies so far this year. We often hear about the aging of the driver population. We often hear about a driver shortage, although I know there's a fair amount of debate around whether there is a real driver shortage, but certainly it's a difficult environment for drivers to operate in. This is something we saw very early when we entered the market, is that what drivers told us is that they have trouble finding freight easily. They have trouble getting good access to good loads. They have trouble just finding the discounts, and they have trouble at facilities. They don't have a good experience at facilities. They're not treated well. Just the life of a driver, it's a difficult job. And as a result, it's hard to get new drivers to enter the market and stay in the market because they often enter the market and find out just how difficult the job is and leave just as quickly. On the shipper side, the difficulties really vary by market, but I think the common theme is that good access to capacity, good visibility of where rates are, and being able to adapt quickly to the market are ongoing challenges. If you look at 2018, it was really a capacity challenge, right? So shippers in general had trouble finding capacity during peak and at a reasonable rate, and rates were exploding. And carriers were doing very well. Carriers had all the leverage. And then coming to 2019 with an exceptionally soft market, and purchasing departments are all looking like heroes because budget compliance is great. Acceptance rates are at all-time highs. From a shipper perspective, the challenge this year is not so much capacity or rates, it's how do you lock in those rates going forward and ensure that the high service you're seeing this year carries forward. What we are going through for the whole market is this digital transformation. So we started to really, I mean, Uber Freight is at the forefront of this, but it's really been in process, I would say, for about 5 years. And that there's been an acceleration of investment in the space, an acceleration of new entrants that are trying to digitize freight and bring visibility to the market. And ultimately, this goes hand in hand with what real-time freight is, because the digitization of freight for me is really about creating better technology to provide better visibility and direct connections between carriers and shippers. And the more you take people out of the middle of it, the more you take friction out of the process, the more efficient the process becomes, and the easier it is to access capacity, the easier it is for carriers to be able to see what loads are available, what rates are appropriate in the market, and be able to plan their weeks and to make smart decisions, and vice versa. The easier it is for shippers to see what's going on in the market, to have real-time visibility to rates and capacity, and to make planning decisions about when to move loads and when to procure and how to procure, and to make better procurement decisions. So for us, again, to achieve that, we knew that we had to scale a dense network. So in 25 months, we built now a global fleet. We're now live in Europe as well. As I previously mentioned, that's over 500,000 drivers that have logged into our application, which is a sizable percentage of the total market. And in that process, we've been very discriminating in who we bring onto the platform. So we set rigorous standards for vetting and monitoring to make sure that carriers are showing up on time, because it's not just about building density, it's about building density of a network of high quality engaged carriers. And since the beginning, we've been very focused on smaller carriers and owner-operators and less than 10 truck fleets. And we're now starting to work with kind of mid-sized and larger fleets and building tools around that. But particularly for those small fleets, every single load matters. And what we find is that they're highly committed to the success of each individual load. But we also make sure that we're driving accountability, because ultimately on the shipper end, you want to know that a good carrier is showing up and that you're getting a quality service and that they're going to be on time. Because we have all this data and because we can actually see where they are when they're logging in, and we have detailed history of how they performed on our loads, and because we're dealing with individual owner-operators quite often, which is a significant percent of our fleet, we have very granular control and ability to filter drivers and kick them off the platform if they are bouncing all the time or they're never showing up on time. So we have very strong filters in the system for that as well. And really, for us, data is the differentiator, because we have all this capability. We have a very deep, and Mike's going to speak to this in more depth, but we have a very deep team of data scientists, and we have a deep capability in terms of leveraging that data to make better decisions. And just jump forward, give you a little more kind of insight into how dense our network is. Here's just a quick view. You can see city by city, and what you're actually seeing on these maps, and I know we showed like three different maps now, and I think we got one more. We love our maps with different colors and different data. But what you're seeing here is in dense metro areas, this is a day in the life of Uber Freight. These are drivers that are logging into the app, and you see different colors there. Those little red pops that pop up frequently are actual bookings, so when a driver is booking a load. Green is that they're looking into the application and they're surfing for a load, and then when you see the red, they're actually booking. So it gives you some sense of the density of the network and how many interactions we have on a daily basis. And those interactions give us a lot of information about the market. They tell us about liquidity. They tell us about pricing, because we can determine based on how many drivers are in an area, how liquid is that market, how many people are clicking on a load before it books, is the price set at the right level. All of that gives us insight into the market. And really what that creates too is this instant capacity. So I touched on this, but because we have all these hundreds of thousands of drivers logging into the application, our loads, they get instant visibility. And almost every day we have loads that are booked in seconds. We've had loads that are booked in 1 second, which is pretty magical if you think about it, because it means that the immediate moment that that load appears into the platform, that there was a driver looking for that exact load, and they hit the button. But it happens because we have so many drivers and so many interactions that it's bound to happen that you have that perfect connection. The other thing it allows us to do is accept almost all loads. So we have, this year is an easy year for most carriers, and that acceptance rates are at all-time highs, but it's also something that we believe is fundamental to how the market should operate. And that as a intermediary with 500,000 drivers logging into the platform, that means that we always can find that one truck to move a load. And so when we provide a rate, that should be a rate that we know we can commit to, and thereby we can commit to 99% acceptance. And that, by driving up the acceptance rate and the expectation with shippers, we also believe that changes how shippers start to think about the market in terms of how they need to source and how deep they need to go in that routing guide. Because all of a sudden, if your routing guide is that much more reliable, it means you don't have to go quite as deep, right? It's a backstop in the market. So one more thing I'll touch on in terms of just the capability of a real-time network is that it becomes self-healing. And so what you're seeing here is an example of a load that actually bounced and recovered within minutes. And the original driver bounced when they were in, they had a mechanical breakdown inbound with pickup. They bounced off the load, and we actually let drivers bounce themselves off the load because we want to know as soon as they're not going to show up. I want to know when they're not going to show up so that we can start to recover. We actually recovered this within minutes. It immediately went back into the application. Another driver picked it up that was actually closer. They arrived 15 minutes earlier versus the original ETA of the first driver, and delivered on time to the destination. And the beautiful thing about this example is it actually happened during a customer meeting, during a customer demonstration, which was just pure chance, but it shows the power of the network. So it was one of those magical moments where all of a sudden you realize, like, okay, the model does work. What we built provides these very discrete and actionable examples of when service is improved because you have this dense, instant, real-time network of freight. So with that, I'm actually going to hand it over to Mike. Mike's going to go into a little more detail on some of the products that we built that leverage this data and build upon this network.
Thanks, Bill. Hey, everyone. For those of you who just joined, I'm a product manager here at Uber Freight, and I'm really excited to talk to you about how we build products as part of our marketplace. And to start, I'll talk a little bit about what we think our mission is. In particular, we think about building to enable the optimization of both our carriers and our shippers. If you think about it, each one of our shippers has an individual network, each one of our carriers has an individual network, and we build products that can put those two together to increase the efficiency beyond what they could individually. Now, how do we do that? Well, we build upon some of the learnings we've had in the rides business and the eats business in developing machine learning algorithms to pair together preferences, location history, and to take into account geographic factors like market balance. And then we pair that with a freight context, so understanding what routes carriers prefer and understanding how to experiment in this context. Some of you may not have thought about this, but in the rides business, it's pretty easy to experiment when your drivers stay in one city. But in the freight world, you have shippers that are pretty much confined to one location, but you have carriers who drive all over the place. So figuring out how to solve for those problems and build under these circumstances are some of the really unique and exciting challenges that we have. However, developing those techniques is just the first step. The next part is thinking about those techniques in the form of solving pain points for both our carriers and our shippers. And I'll start on the carrier side. So as we've acquired this data, we think about what problems do we need to solve for our carriers? And one really stood out, both in the data and speaking to carriers individually. And this was the ability to plan and the ability to attain certainty for our carriers. And in particular, what we've seen and heard from our carriers is that they struggle to build reliable routes, either ones that get them home or ones that enable them to travel familiar corridors. And we decided, well, maybe there's something here. Combined with our data and our experimentation platform, we looked and we found that carriers are trying to often build bundles within our networks. They're trying to build those round trips and build those schedules that maximize their efficiency and maximize their earning power. So with that, we decided to go one step further and build a product that solved this pain point specifically. And recently, we launched a product called Bundles. Bundles is the ability for a carrier to book a load going out and coming back at the touch of a button. Using our matching algorithms, we understand both the commodity types, the route preferences, the hours of service, utilization, and we even take a look at how often a carrier is going to get delayed at a single shipper or receiver in order to ensure that these bundles make sense. And with that, we've seen that we're able to maximize our carrier's ability to haul efficiently. And what you're seeing here on the map is actually an example of one of our early sets of bundles launched in the Texas market. And you can really start to understand how bundles in a product like this enables carriers to spend more time operating out of a certain region with the certainty that they're coming back to that region each time. Now, to go even further, I'll highlight some of the mechanics of why this type of product solution is so powerful. The map you're seeing here on the right was actually our very first bundle coming out of Houston, the load dropping off outside of the Houston area, then 30 miles between the drop-off of the first load and the pickup of the second load, which headed right back to the Houston area, very near the original pickup. Now, looking at this all together, this was one bundle for our one carrier, 2 loads, approximately 30 miles of deadhead between loads and 563 miles altogether. Now, this means that the utilization or efficiency for this bundle was roughly 95%, which is really impressive compared to the industry average of 80% utilization based on empty miles. Now, this type of transaction is made possible both by our understanding of the data and our abilities as a marketplace platform. And then on top of that, pairing that together with the freight context and specifically the pain points we see with our carriers. And this is something we're very excited to scale both for our carrier network, but also to the network as a whole, as we look to solving problems for shippers as well. In particularly, we believe when we pair together our data abilities and our freight network, we are building a marketplace that is both reliable, flexible, and transparent, which for both our customers and our carriers, we believe is the key to refining the logistics space. Now, diving into how we turn those insights and that data into solutions for our shippers, we'll introduce the Shipper Platform, which some of you know is our innovative platform where we test out new solutions and ideas for our shippers and give them the real-time logistics platform that they've been yearning for. And in particular, building upon what Bill talked about earlier, one of the key pain points that we've solved by delivering such a robust and real-time marketplace is guaranteed capacity. In particular, in our Shipper Platform and as a commitment to our customers, we are able to stand behind real-time rates up to 14 days in advance. On top of that, we will not only guarantee the capacity, but we also highlight when is the most optimal time to move your shipments, which is something new within the freight industry, which is typically relied upon the asymmetric amounts of information between brokers and customers, where in this context, we believe that we are able to give full transparency to our customers about when is the best time to move a load and where capacity is the tightest or the loosest. On top of that, not only are we able to give that transparency and that capacity guarantee, but we have a fierce focus on speed and accelerating the point of instant coverage. If you think about the current freight model, from the time that a call goes out to a carrier to the time that a load gets tendered and quoted and essentially moved, we're talking about hours. And these hours are wasted hours in terms of coverage. And at the end of the day, it boils down to increase in price. So our mission here is not only to give that transparency, but to accelerate the touch points and ensure that with real-time pricing and the capacity behind our marketplace, we are getting loads into the marketplace as fast as possible, saving our shippers money and improving the lives of our carriers. On our end, with our real-time pricing algorithms, we're looking to decrease the time it takes to get a load into market drastically, from hours under the traditional model to as short as half an hour in some of the examples we've seen. On top of that, we're not stopping there. We also have looked to expand how we interact with our customers and bring some of this innovation across the market. And we've started with our announcements of integrations with SAP as well as MercuryGate, and we'll continue to build upon some of the offerings and the abilities we can service for our customers across their marketplace. Lastly, when we zoom out to our marketplace as a whole, Uber and Uber Freight is committed to delivering the products and services from a marketplace perspective that will give you a reliable, flexible, and transparent marketplace, and enable Uber to act as your trusted supply chain partner, hosting a marketplace both in the United States and in Europe, and a global virtual fleet of high-quality drivers who are responsive and able to deliver that redefined logistics experience. Now with that, I think we'll turn it over to Q&A.
Great. Thank you so much to you, Mike and Bill, for sharing your perspectives. As he mentioned, at this point, we'll go ahead and take some time for questions from those of you in the audience. If you have not already submitted those, feel free to click on that Q&A button in your control bar, and we'll get to as many as we have time for here at the end. First question for Bill. What was the catalyst that
Yep.
led Uber to branch out to freight from the consumer transport world?
Yeah, absolutely. So Uber, we started in rides, and actually when we started Freight, we were probably 6 months in at that time to launching Eats, and there were still some, I'd say, question marks around how Eats fits within the whole ecosystem. And I think what we've seen in the last 2 years is really kind of, as I touched on this a little bit at the beginning, but Uber very much is a transportation platform. We have all this technology, capability, infrastructure, and operational depth that we built around moving things or people around that really also applies to moving things around. And so we first saw this with Eats, where we were able to leverage our driver population to start moving food around. And it actually started with Rush. So we used to have a product called Rush, which was point-to-point delivery of stuff. And what we quickly discovered is that people really want food more than anything when they're looking for 1 to 2 hour delivery. So we got into Eats. And then while building out Eats, Uber started thinking about other markets. It was, through Uber Freight, and part of the team came through an acquisition. And so there was a couple teams working on this problem at the same time that all came together. And then it was pretty clear within Uber that this was a huge opportunity because you're dealing with a fragmented market on both sides, similar to what we do on the ride side. You've got 3.5 million truck drivers, 1.5 million carriers on one side of the market, and tens of thousands, up to 100,000 shippers on the other side of the market. And it's a market that also has not seen a lot of capital investment in the last 20 years in technology. And I say that in the context of other industries where there has been significantly higher levels of capital investment relative to their contribution to the overall GDP, as where transportation has been fairly undercapitalized in the last 10 years. And as a result, like the way we do business, and I've been in this industry now almost 15 years, but the way we do business hasn't changed that much in the last 20 years. And it's gotten better, but it's more incremental. And so it's clear, and it's also been clear for a while that the Uber for freight and the Uberization of freight is a huge opportunity. And it wasn't just us, right? So I think in the market as a whole, one of the funny things about Uber Freight is that before Uber Freight came to market, there were actually 45 companies that had called themselves Uber for Freight in their press materials. And so the Uber for Freight. So the idea was not brand new when we came to market, but certainly Uber brought a unique set of capabilities when we came to market. So that's the quick overview.
Great, thank you. And next question, is Uber Freight still only FTL loads, or are you moving into the LTL world down the road as well?
Yeah, we currently do not move any LTL freight, so just truckload. LTL, it's a very interesting market, but it's much more, I'd say, capital intensive, and it's a much more consolidated market. So you don't have that same level of fragmentation that you do in truckload. So there's a variety of reasons. There certainly are interesting challenges to solve in LTL, but not something we're doing currently.
Okay, great. And do you anticipate Uber Freight applying to other modalities as well, such as seagoing vessels?
Yeah, the similar, I'd say, like ocean and air are also consolidated, similar to LTL, in that you have a fewer number of players, and so the market dynamics are a bit different. So we currently don't have plans to get into those markets. Also, truckload as a percent of total global logistics is about half of total global logistics, and it's by far the most fragmented sector. And what we hear from our shippers quite often, particularly the global shippers, is that they've got tens of thousands of truckload carriers they may deal with, is where they only have, say, 10 ocean liners and 5 air companies and 3 parcel companies. So that's where we saw the biggest opportunity. So our focus is very much on truckload.
Okay, great. And can you briefly talk about your Power Loop line?
Yeah, absolutely. So we launched Power Loop. It's been 2 years now. We are live in California and Texas currently. We are building density much like we did in Freight when we launched initially, where we started in Texas Triangle, and then we're now kind of up and down the coast in California. The idea of Power Loop was to solve both a shipper and a carrier problem. On the carrier side, what we saw is that our driver and carrier population was biased towards small carriers. Over half of our freight moves with owner-operators. And if you're an owner-operator, it's unlikely that you can easily participate and drop freight business. And so we wanted to provide that access. And we thought the easiest way to do that was to provide a pool of trailers that would be available for any carrier to use on a drop trailer load. So that was one impetus. On the other side of the market, what we heard from shippers is that shippers often have issues, particularly in peak times, of finding flexible capacity for drop opportunities, and also finding power for drop trailers that they may not have an interchange agreement with. And so you can get what they call like binding at the dock, where you have a trailer that it may be carrier XYZ, and maybe that carrier XYZ has a few interchange agreements, but none of those carriers have power, and all of a sudden you have no flexibility, and your operations are locked up. And so there were challenges on both sides that we saw. If there was one common pool of trailers available to multiple shippers and multiple carriers, we could solve these problems. And that was the impetus of Powerloop, and that's how we've deployed it. So we have dozens of shippers engaged in the pilots, and hundreds of carriers that are participating. And what we hear from carriers is that all of a sudden they do have better utilization. They can get, they're just dropping and hooking. There's no wait time, right? It's fast turnaround. So all of a sudden they're seeing their daily revenues go up. And for shippers, they love it because all of a sudden they have more flexibility, more optionality in terms of how they manage their yards and how they can kind of increase or decrease the number of trailers in the yard based on demand, and be a little more adaptable to the market conditions. And so that's really the vision with Powerloop.
Okay, great. Thank you for that. And a couple questions about just kind of different things you might have available in the future. When will you have flatbeds or hazmat freight available?
Yeah, I see those two questions. So we will definitely. So we actually are. We spoke at CSCMP last week and did announce that flatbed is coming. So that is an area that we're getting into here quite quickly. And so there'll be a lot more news coming down on that. That's an area where I think it's a pretty natural extension because flatbed also, you have a lot of owner-operators in that space, and it's a very fragmented market. And so we see that there's a similar type of opportunity. Hazmat, we don't have any specific plans on hazmat, but certainly we're looking to add the full suite of services as we continue to expand.
Great. And how are problems like detention and lost drivers handled? Is there any phone interaction with a person?
There is. So one thing that I think it's important to understand, there's a lot of, I'd say, conversation we see online and amongst others in the industry about like, is it like the technology versus the people versus tech, right? And like ultimately, you often need people on the other side of the transaction, which we fully believe. Uber and Uber Freight are both ultimately run by people on the back end, and we have people that will pick up the phone when we need to. And Uber was actually pretty operationally intensive as they launched and grew, and we see Uber Freight being very similar because we are a technology company that operates in the real world, right? Versus a lot of technology companies who never have to meet their ultimate users. Like certainly we interact in the real world and engage heavily with our shippers and our carriers. Now with that, we are a tech company, and we believe that there are significant problems in this space that can be solved with technology or streamlined. We take a lot of friction out of the process. But if there is a issue, if it within the application, the carrier can hit a button and dial our support, get somebody on the line instantaneously. Right? We recently announced that we're scaling up our operations in Chicago, and that those operations in Chicago are really it's the team that deals with our engages with our shippers and our carriers on a daily basis. So if there is an issue with detention, if there is and actually I think there's a few other questions on here. Well, I'll get to those separately. But when there are exceptions within a load, we do have people on the other side of the phone that will pick up and answer that.
Um, Next question, how does Uber differentiate from other digital freight brokers in this space, such as Convoy?
Yeah, so I think there's a lot of digital players in the space that are all doing a lot of good work, and it's a pretty big ocean if you look at the total freight market. Like even the largest player in the space is still less than 2% of the total volume in the space. So nobody's out there with 30% plus, or so there's a lot of, I'd say, room for each of us to grow. I'd say versus other digital players, there are a lot of things that Uber brings to the table that come along with being a transportation platform. Meaning we touched on a bit of that in the presentation, but there's a lot of technology that we've already built around dealing with geographic data and pricing and infrastructure and like routing and navigation and all that stuff that's already built that we can plug into quite easily. So there's a lot of, I'd say, acceleration and capability that comes with that, and our shippers and carriers ultimately see that. The other piece is that we are a global company. So as of today, we're the only company in the space that is global and operating in multiple markets. And part of being Uber is it is a global provider. I think for anyone that travels internationally quite a bit, one of the beautiful things about Uber is that you can show up in Paris, right, and pull out your phone and get an Uber just as easily as you can in San Francisco. And so for global shippers, that is a big part of the conversation. But also, I think we are moving at a pretty rapid pace, and it is very much an Uber pace. And so I think that's huge. We also, when we came to market, we were the first ones that 100% of the loads were available to any carrier at a fixed price. And I think we've been very focused on bringing a singular vision to market in terms of building a more efficient, fast reacting, real-time network. And so I think our tech and our capabilities and our org is very much tailored around that as well.
Great. And can you share a bit about how pricing works? Is it automatic based on supply and demand similar to Uber riding, or is it based on prearranged rates between Uber Freight and carriers?
Sure thing. So the way we think about pricing here is definitely in line with supply and demand. We focus heavily on maintaining a marketplace balance. However, when we think about marketplace balance, it isn't just how many trucks and how many loads are there in a specific region, but is actually across multiple dimensions. So we look across both pickup days and applying every single driver or potential driver to a unit of supply in each one of those pickup days, as well as across other dimensions, such as the market that they're participating in, whether it's van, reefer, or if they can do both, as well as other external factors such as the time of the year and potentially the season that we're participating in. And we actively change rates throughout the course of the day to ensure that we're maintaining that marketplace balance with both a forecast of what we expect future conditions to develop like, as well as a historical reference about what conditions have we experienced on a specific lane and for a specific one of those dimensions over time.
Okay, great. And we are being asked quite a bit about a reefer. Is this something that you all currently or plan to incorporate in the future?
Yeah, we currently do quite a bit of refrigerated. In fact, our refrigerated volume is about on par with the percent of the market as a total, meaning that it's definitely a big part of our operation. We work with quite a few customers in the food space, particularly.
Okay, great. And a couple of questions also about liability. Can you explain how liability for freight damages are covered with Uber Freight and how you handle claims?
Yeah, so in that regard, we are the same as so we are a registered broker on the back end, right? So legally to move freight, we are a broker. And so when we book a load, the carrier has the primary liability, and we go through all the standard compliance processes and contractual compliance, insurance compliance, authority compliance. We use several third-party services to monitor insurance compliance on an hourly basis. When there is a claim, we will facilitate that with the carrier and the shipper, but the carrier still has primary liability, just as they would in any kind of brokered transaction. And so we validate the carrier's cargo liability, and we accommodate. Uber has its own liability insurance, which will kick in if the carrier's primary. If the carrier's insurance doesn't kick in, so we do have like our own internal coverage, but it still operates the same as a traditional intermediary would, that the carrier has the primary liability.
Okay, great. And is Uber Freight currently available in Canada?
We are not currently live in Canada.
I'm looking through. Okay, how do you manage a driver under an Uber load that needs motivation to deliver on time?
Oh, that's an interesting question. You mean, I guess, interpreting it as if a driver needs motivation. I would say that in general, most of our drivers are, we deal with small carriers. I would say in general, your small carriers and the owner-operators are pretty committed to every load. These are small business owners that are managing their business very tightly. We have a carrier team. We also track those loads in real time, so we can see if a load's not tracking against its expected ETA. So we will call a driver if they're not, if it looks like they stopped, and and our system will automatically flag that and notify our tracking team. So we will call those drivers if need be. But the app also will ping the driver and say, "Hey, check in. We haven't heard from you."
Great. And are there any distance limitations in terms of what you can offer? Is cross country still an option using Uber Freight?
Yeah, so we will haul as long as there are highways in the United States. So in terms of distance, we are covering everywhere across the lower 48 states. And we do see a considerable amount of volume across all of our haul types, both short haul, medium distance, long haul, and ultra long haul across the country.
Okay, great. And what are the requirements for a shipper to sign up with you?
Yeah, so ultimately they have to pass a credit check. So we go through traditional, like a credit review with the shipper. The commodity has to match, the services have to match. And then, we build, just like with the carrier, we have to build a relationship with the shipper over time. And we do provide two-way feedback, and then we have facility reviews. So the shipper, we provide reports on how the facilities are performing and do periodic reviews and QBRs, and we send a lot of intelligence back to shippers as well in terms of how their loads are performing, what we see in the market, and how their individual facilities are performing.
Okay. The next question. Existing TMSs do have routing algorithms for optimized shipment routing. How different is Bundle from those, and what value addition does it bring apart from dead haul miles?
Got it. So specifically in comparison to routing functionality in the TMS, the bundle and the bundle program that we are offering is somewhat different in that we are actually looking at multiple loads and their load characteristics and pairing them together as the most optimal load pairing in our network that will result in the highest efficiency and cost effectiveness on behalf of the carrier, as well as the highest likelihood for us for that bundle to be successful. Comparing that on the routing side, where we are sort of going through a routing guide and looking for acceptance, the bundle itself is looking at historical load characteristics and trying to ensure that we have the most efficient pairings in our network. And this is combined together with a regular scan of our entire network in which we create optimal bundles, and then as new loads come in, we will break those back down and reform them to ensure that we have the most optimal set of pairings in the marketplace together. So in terms of the value add and the value proposition from bundles in comparison to a routing guide, it is essentially both the marketplace optimization, ensuring we have the most optimal bundles out there, and the efficiency piece in knowing that we have optimal pairings that can be booked at the tap of a button that are highly likely to be successful and have very little exception management associated with it.
Perfect.
Yeah.
Next question. The European market has nearly no owner operators. Most of the drivers are employed. So, what is your strategy for Europe?
Yeah, absolutely. I've spent quite a bit of time in Europe this year, so I have a lot of insights into that. So there's a couple things about the European market. So there are actually a lot of owner operators, but they're contracted or subcontracted with primary carriers. They do exist, but the lone wolf owner operator that exists in the U.S. as a business owner is much less common in Europe. So that is a correct statement. What we also find culturally is that drivers in Europe don't have the same expectation of booking their own freight, managing their own work that they do in the U.S. What we do see is a high number of very small carriers. So the market is similarly fragmented, and so there's a lot of small, like less than 10 truck carriers. The other thing that's happening in Europe is there's a secular shift that Eastern European carriers continue to grow as a percent of the total. International freight also continues to grow. Europe is in a secular shift to become a more open market, and there's, from a regulatory policy and general sentiment, that continues to be where the momentum is. And so the other, like the Spanish carriers and the Eastern European carriers do over 75% of all international freight today, and that number is only rising as a percent. And those carriers tend to be highly fragmented. And so there is a bit of a difference between your like domestic carriers that operate within country, like within France, within Germany, and then your international carriers, which Eastern European cover quite a bit of that. So while there isn't a pure owner operator, it is still a highly fragmented market. And what we're seeing already is that our app adoption, which is how we measure whether or not our carriers are using our application, is actually trending faster than it was in the US. So we're seeing a lot of engagement from carriers. And, you know, the value proposition is very similar. And in the end, carriers, they want to be paid quickly, they want to be respected, they want to have good access to work, they love the instant visibility and the transparency in the rates. And so all that stuff transfers over pretty directly, we're finding.
Great. Next question. While the platform is easy for drivers to use, there's still costs to running a truck. How do you keep carrier rates in a space that is not insulting to the drivers? And what are drivers saying about discounting their services just to drive a few less miles?
Yeah, so I'll say this is twofold on the platform. Number one, we are striving to make carriers more efficient when it comes to booking their freight. So all of the tooling and the application that we build are focused on enabling drivers to better schedule, create certainty, and decrease wasted time and miles while they're on the road. Now, that's just the first part. And the second part, though, is sort of decreasing the barriers to entry and improving the economics of an owner-operator. And in particular, we do this with many offerings. We do this by, number one, being a sort of provider of loads and freight that is free. We don't charge any money to use our app and have visibility to the loads on our app. Number two is through loyalty. We have a Plus program, which is a loyalty program to provide benefits to owner-operators on par of some of the discounts you would receive as part of a large fleet. Lastly, or thirdly, actually, is our quick pay. So in the industry, many carriers have to pay in order to have their payments processed and factored, whereas we guarantee quick payments through the app. And then lastly, through additional programs such as PowerLoop, where we're hoping to elevate our carriers' ability to do drop trailer and to run programs in a more efficient route that previously would be exclusively reserved for larger asset-based carriers.
Great. And next question, do you have a standard broker-shipper contract? Do you assume any liability knowing you're only acting as a broker, not a carrier?
So yeah, I think this answer overlaps with the last one. So we assume the same liability that a traditional broker would. And so the way we engage with our shippers and our carriers is not dissimilar to how any large brokers would or other providers. So the carrier's insurance is still primary. And that's particularly for cargo liability, like it would still start. I mean, you got to get to the facts of the individual situation, but yeah, we have our own. So Uber has a large umbrella policy. We have our own insurance that will kick in if all else fails. But just as in a traditional relationship between like a broker carrier and shipper, depending on the liability. But if it's a carrier fault, then carrier is primary.
Okay, great. And kind of tagging on to the previous question about Europe, can you share a bit about where in Europe Uber Freight is operating so far?
Yeah, absolutely. So when we went to market in Europe, we have a forwarding license in Netherlands. Now, legally, that authorizes us to move freight across all of Europe. So there isn't a constraint in where we can move freight, but we also have an operating authority in Germany as well. So we're currently live in the Netherlands and Germany. We do have freight that moves between many other countries as well. So it's not, we don't do only domestic Germany and Netherlands, but I'd say the vast majority of our freight is in or out of those two countries today.
Well, and then next question, in terms of quotes, how long are the quotes good for? That day, that week? Can you share a bit about that?
So in terms of our spot quotes, the sort of expiration of our quotes is dynamic depending on the quote type and what you're looking for. And so the expiration can range from either an hour to 24 hours. And the reason why we provide a dynamic expiration time for our quotes is to ensure that our customers get the most up-to-date rate. Over the course of an hour throughout the day, given the example I showed you earlier in the presentation, our rates can change up or down, and we want to ensure that customers have the most up-to-date real-time price depending on marketplace capacity.
Okay, great. And next question, what metrics do you track to understand the health of the marketplace?
Sure thing. Great question. So there are many metrics that we look at over here, as you can imagine, but one of the key things we focus on for us is the speed of our marketplace. Now, looking across many of the dimensions I mentioned before, whether it's the haul type, the market we're participating in, we look both historically and at the forecast of our marketplace and understand how fast we are moving loads compared to normal, and given the incoming capacity, how fast are we moving that capacity relative to normal. Now, we also compare some of the other external data providers and look at market trends to ensure that we are either on track or ahead of the market in comparison to both our pricing and our matching.
Yeah, I personally look at the FreightWaves tender rejection all the time, so I'll give a plug for the Sonar data as well.
Always appreciate that. Great question, by the way. What is the process for carrier onboarding, and how do you qualify them before onboarding?
Sure. Yeah, I can cover that real quickly. So I touched on it a little bit earlier, but to cover it again, we do a standard compliance check. So we check so the driver, we validate the insurance certificate. Carrier has to sign a contract, so we do this contractual compliance. We do the FMCSA safety check. So we don't use any carriers that are conditional. We only use they have to be active or none, or satisfactory or none. And then even if they're none, and I'm really getting into the weeds here, we have our own thresholds for inspection failures that we use that are a little higher than, I'd say, industry standard. So we have a pretty strict adherence on the safety side. And then we validate that. So we have integrations with third-party data sources, as well as we pull all the FMCSA data directly and continually validate our own our carrier base and kick them out for anybody that has compliance failure. And then we also do quality checks. So if a driver is not performing well, if they bounce the first 3 loads that they book, then we'll put them on probation, and we have our own kind of internal quality thresholds.
Okay, perfect. Next, if a shipper would like to know where their cargo is it possible to contact the driver directly?
So, great question. We do not enable our shippers to contact drivers directly. However, we do provide our shippers the tooling to both request insight into the delivery and ETAs of their shipments. And this is made possible both by our tracking programs that utilize our app to understand how our carriers are progressing along on a specific load, as well as our operational capability behind the scenes to ensure that if an exception is happening and if a load is not going to be delivered on time, that information is readily brought up and addressed in any way possible.
All right. Well, thank you both so much for sharing your perspectives, and thank you to all of you in the audience for providing such great questions and engagement today. I think we are going to give Bill and Mike a bit of a break. They have been troopers sitting here fielding all of these questions, and there are tons that we've not had an opportunity to get to. So rest assured, I will provide this list to them so that they can reach out with you directly following the webinar and make sure that all of your questions are answered. Thank you again, Bill and Mike, for taking the time to share your insights, to everyone on the line who's here today, and again to Uber Freight for partnering with us for today's presentation. We hope you'll join us again for another webinar soon. Have a great afternoon.